Hope you can hear me. Yeah, can you all hear me?
Yes, can hear you, sir.
All right, very well. Good evening to the accounting community. Good evening to everyone that's made that time to be here with us this evening for this lecture and this enlightenment. My name is Fatih David Atta, and I'll be the one to anchor or I'll be the one to present today's paper on ensuring internal controls and compliance. As accountants or as auditors or as financial professionals, we are there to add value to the organization that we are working for or to our private businesses that we are having and so on, to the government, to the private, or wherever we find ourselves working. So the essence of this topic has become very paramount at this moment to remind us professionals, to remind the accountants, to remind the accounting community on the need for them to ensure internal controls and compliance at all times in their organization and wherever they find themselves. So this has become necessary to add value because accountants and professionals are there to add value to wherever we find ourselves. And this is why this topic came timely this month, this first presentation for the month of October, November, for us to do justice to it. Now, the course overview. This course will provide an avenue or an overview of the concept of internal control, compliance, internal audit, internal control. But furthermore, the course will enlighten participants. Huh? I'm meeting. Hello, can you hear me? Okay, yeah, we'll
Yes, we
go.
can
Yeah,
hear
so
you, sir.
we'll go on, sorry. So the course will enlighten participants on the need to ensure internal controls and compliance at all levels, institution and business engagements. The learning objectives. Sorry, I'll call you. To understand the internal control system, the internal audits, and compliance. The objectives of the internal control. We also understand how the strengthening of internal controls and the importance of controls to rules and regulations. So this at the end of the course, at the end of the training, we, we expect we expect that we all are abreast with these learning objectives of today's paper. Now, first, what is internal control? Now, internal control is a process, effects, to control internal control is a process effected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance. What they mean here is that these internal controls are being effected by the board of directors, by the management of the organization, and then other personnel. These other personnel involve humans that work in the organization or systems that have been deployed to ensure that there's internal control in the organization. That timely information is reliable, the information is reliable, it's accurate, and it's timely. So looking at this now, we all know that the information is reliable, is accurate, and is timely. That is what this internal control is trying to effect at all times in the organization. And then of compliance, that is a company organization complying with the applicable laws and regulations, contracts, policies, and procedures of the reliability of financial reporting. That is all the information are all the information in the are all the information in the financial statement, are they reliable? Can the share can the stakeholders can the stakeholders rely on this information for their various decisions? So internal control is just a process, just a whole evolutive process that is being designed just a way that it will give reasonable assurance. Although we cannot give 100% assurance, but we give reasonable assurance that everything is going well or how things should be done in an organization. And that information is very reliable, is accurate, and it's also timely. And of course, with applicable laws, regulations, contract that is adherence to guidelines, procedures, regulation in all uh, organizational activities. That is what we are discussing or what we meant by internal control. Now we are looking at the internal control system. The internal control system comprises of 5 elements or components. And here we have the control environments, we have the risk assessment, we have the monitoring, information and communication, control activities. All these are the internal control system, internal control system that we need to understand as we are trying to ensure internal control and compliance in the organization. We look at it one after the other. The first one here is the control environment. At the control environment, we are trying to look at and set a tone of organization and influences. That is, we are trying to say that at this level of control environment, this demonstrates commitment to integrity and ethical values. At this level, all those who are charged with responsibility of running the organization or how the organization is being run, at that level, they are enforcing accountability, they demonstrate commitment to competence, exercise oversight responsibility, establish structure, authority, and responsibility. At this level of control environment, trying to establish the structure, the authority that is delegated to each other, and the responsibilities. Also, exercise oversight responsibility. What and what is everybody supposed to do in an organization? What is he doing? What is the responsibility of each person at any point at any given time? Then that is looking at the control environment as is linked to internal control system. Then the risk assessment, of course. Looking at risk assessment is a process of identifying risks to achieving organizations, any risks or anything that will cause or will limit the actualization of the organizational objectives is being analyzed here. Analyze the potential events, considering the likelihood of occurrence and impact on achieving organizational objectives. We want to assess these risks. Let's look at the risks that is pertinent to this organization. There are different sectors. There's the manufacturing sector, the consumer goods sector, the banking sector, and the different sectors of the economy. So we want to risk as the second level we're talking about now, the risk assessment. The third one is the control activities. Control activities help ensure response are effectively carried out and include policies and procedures. Approvals, how are approvals done? What is the procedure for authorization, for verification, for reconciliation, security over assets, and segregation of duties are the control of activities. We want to select and develop control activities. We are also looking at the deploy through policies. This control activities comes in form of policies and procedures. They also select and develop general controls over technology. What are the controls that are put in place after you have identified the risks and you have assessed the fraud and whatever you want to do, and you have identified the risks, analyze significant change, then you go to control activities. Then information and communication. We use relevant information both from internal and external community. We get information from the internal, the external. By this, we are trying to get the information so that we're able to, so that we're able to ensure that the internal control policies are best at the particular point in time. Then monitoring. Monitoring here, we just want to evaluate the effectiveness of the organizational internal control. I want to check if it is effective. We want to understand if these internal controls are being effective. We monitor and see from January to February, or sorry, from January to June, what has been the performance so far? Is there any need? Is there any need for us to improve? You are monitoring. It's when you monitor it that you know the next line of action to do. So we are going further to look at the internal control and internal audits. We are saying here that internal audits help teams to accomplish their goals by bridging a disciplined approach, an objective perspective to the effectiveness of internal control, risk management, and adherence to an alignment with company goals and objectives. That is, internal audits is more of a third line of defense. After this one, I think we're looking at the line of defense in the organization. So internal audits help the team to accomplish their goals by bringing a disciplined approach of objectives or perspective to the effectiveness of internal controls. So risk and risk management, adherence to the alignment with company goals and objectives. So some areas that internal control might focus on include operational risks, environmental compliance, procedural effectiveness of systems, fraud management, health and safety compliance, and regulatory compliance. So I think look at the internal. The internal audit is also an unbiased review of the company's systems. Internal audit tries to look at the company's internal system and procedure. So an internal audit is a check that is conducted at specific times, whereas internal control is responsible for checks that are ongoing to make sure that operational efficiency and effectiveness are achieved through the control of risks. That is, internal control is more of a day-to-day activity that is trying to prevent, that identify the risks inherent. You are trying to control, trying to mitigate those risks, trying to reduce the risks that is trying to reduce the risks that will occur. And therefore, internal control and internal audits work side by side. So while the internal control is more of a daily activity that is done, internal audit also is in that nature, but it's just a third line of defense. They will come and review what the internal controls have been set and all other procedures that have been also made possible for the organization and all. So that why I brought in the issue of internal audit and internal control for us to have an understanding of it. Then we have the three lines of defense. You have the three lines of defense. You have the three lines of defense. I'm presenting. I'm buying. Don't worry. I'm presenting something. I said I'm presenting. I'll call you. Don't worry. The three lines of defense model. At the first line of defense, that is where we have the internal control measures. The organization will now set the internal control measures to mitigate the possible losses. Now, we want to establish what and what to be done in an organization to prevent fraud, to prevent customer dissatisfaction. Of course, if customers are dissatisfied, they will not want to patronize that particular organization any longer. Therefore, the internal control measures are there to assist the organization to grow, to add value to the organization at all particular time. So internal controls are the first value. Sorry, I'm buying. Don't worry, I'm buying. Don't worry. Internal control. Can you hear me now?
Yes, we can hear you.
You want hold it and see. I'm buying. If like hold it and see, I'm buying. I'm buying. If like hold it and see. Hold it now. Hi. Internal controls and presentation and measures. Sorry, there's no light in my place, so I came in somewhere to present. So I'm trying to. Sorry for the distractions, please. So I was discussing the three lines of defense model. So the first, why I brought in here is for us to understand the role of internal control and that of the internal audit. So the first line of defense, that is where the internal control measures comes in. We will identify the loopholes. We will identify what can we do in an organization that we make the result to grow higher, to meet the objectives, of course, which is every organization will want to meet up with with the objectives, with the mission of which it was being established. So management itself also bring its own controls so that everything will work, will flow appropriately, so that the day-to-day activities will flow at a very good position. Then second line of defense, which is not in our paper today, but I'll mention them: financial controls, security, management, quality of the goods, or the services, inspection, and then compliance falls under the second line of defense. When I'm looking at the three lines of defense model. Then the third line of defense, we're looking at the internal audit. Internal audit is the third line of defense. Then we look at the external audits. Then look at the regulators. So all this, they play a vital role. Their sole aim is to ensure that organization meet with their objectives. They keep on rendering the services in which they are into business to do. So the first line of defense, that is where the internal control measures are being set by the organization. Then at the second line of defense, or second line of defense, that is where the compliance issue comes in. Compliance with laws and regulation, compliance with internal policies and procedures, compliance with external bodies. Every organization has like a regulator. Like the bank is regulated by a number of institutions like CBN, NFIU, units in EFCC, NDIC, and all. So they want to comply with these policies. If it's other sectors in the economy, they also have their bodies in which they report to at all times. And so the three line of defense are modern. So that is why I have brought this here for us to understand the role where internal control is being placed, where compliance is being placed, and then where internal audits is also placed. Now, what are the objectives of internal control? Remember, you don't just do something. There must be a reason why something is being done. What are the objectives of internal control? One is to safeguard the of a company, to safeguard the assets of a company. What are the assets we have? We have both the current assets and the non-current assets, which are further divided into tangible, intangible, and all. So we are trying to pretend to protect it. If it's cash counts. Cash counts are being conducted at every point in time. The internal control uh, should be should be set in such a way there is cash count at all times. Cash count is to confirm the cash that is written on statements or on their system or their software and the physical cash that they are having at the moment. If there is discrepancy, we will also investigate and know why there is difference between the cash on system and then the physical cash available. So this safeguarding of assets of the company, also the physical assets, we wouldn't know. Every month you need to check that all the assets are intact. All the assets are intact because they may be preferred by staff in the organization. So at any point in time, the asset, if there are no internal controls, like when goods come in, who receive the goods, how is it handled, how are the goods issued out, how is money handled in an organization, who receives the money, who disburses the money, who keeps the money, where is it kept, who has the combination to assess the where the money is being kept in an organization, when when is the manufacturing organization, when the materials are brought, how are they done? How are the maintenance of the equipment that are being used done? What is the procedure? Is there failure or is there non compliance with each of the procedures that have been set by the organization? All these are trying to prevent or detect fraud and errors. Remember, if the financial statements are showing that we have this stock number of stock available at the end of the year, and whereas it's not up to that due to maybe preparing or all that, the financial statement is not actually stating exactly what is there, and that will reduce the confidence of various investors in the organization. Two, to ensure orderly and efficient conduct of business. Internal policy. These policies will enable the company to work well. They will roll out policies every day, policy on cash management, policy on this, policy on that, policy on customer, policy on a lot of policies will be rolled out by the the department, by the management through a department that is channeled to saddle the responsibility to roll out policies. These policies have been rolled out because you have seen what has happened in the past 3 months, or you have seen what has happened in the last 1 year. We want to now roll out policies that will prevent such things from occurring in the nearest future. So with this, policy shows you how the business on how the day and day activities of the organization should be run. How when a customer comes to buy something, how are we supposed to attend to the customer? What and what are we supposed to do? How are we going to how are we going to how are we going to conduct the business in the whole day from the start of the business until the end? Opening activities, closing activities, during working hours, when is this, when is that? To ensure orderly and efficient conduct of business internal policies. Now, ensure compliance with applicable laws and regulations. Okay, one of the laws says about this, like, for instance, organizations need to prepare their statements according to the IFRS. They're supposed to be compliant they're supposed to comply with the IFRS standards. They're all provisioned like IS1, IS2, all and all. What should you do when you have biological asset? That is when you have agriculture IS41. What should you treat this and all the standards that you have been learning is still part of ensuring that we prepare this financial statement in the acceptable laws. Then coming to tax, the organization is supposed to pay tax, supposed to pay these taxes every month, pay as you earn, file it on or before 10th, file your withholding tax also, file your VAT before due date, on or before due date. Otherwise, there will be penalties. So if we ensure compliance with applicable laws, the company will not be paying fines. The money that would have used to or channels to another investment outlet will be used to pay fines, especially those companies that are highly regulated, that are listed on the Nigerian Exchange Group, and all. So, you can now agree with me why there is need or why the executive of internal control, one of which is to ensure compliance with applicable laws. Somebody should off his or her this thing is making noise. Ensure compliance with applicable laws and regulation. Then number four, ensure the accuracy and completeness of internal accounting records. All right, now information that are being presented out need to be accurate. Is it complete? Okay, you are reporting that you have receivables 10,000, whereas the receivables is either more than or less than in one word or other, which means information has not been clearly uh, brought together. But if the internet control measures set in place and are being monitored, we will discover that the accuracy and complete of internal accounting records will be more, it will more, it will come out, it will be more, it will come out to present more a fair view of the organizational activities. Also, the timely reporting. You know, when nobody is there to control or to monitor the activities of the organization, it will it will not make them to always be on their toes to prepare this information because you keep on piling information. Then if you don't work on your information on daily basis, before you start piling up now, you'll not be able to you'll not be able to not be able to make it work. The work will become so bulky for you. The work will become so bulky for you. To prevent that, the internal control will now ensure that every day, maybe every day, this thing must be done before close of business. This must be done. With that, your account or books are being updated. There is no lapse. There's no lapse. Everything is being updated and every time because the rule says you should do this, you should do that. The accurate preparation of financial information, high quality of both internal and external reporting. There are some reports that are being internal, while some reports are all external, and it will high quality of both internal and external reporting. Now, we look at strengthening the internal controls. How can we strengthen the internal controls? Strengthening of the internal controls. We have understood that the internal controls are of very good, they are very good to the organization as they add value, they prevent fraud, they prevent errors, they enable the organization to meet up with their objectives of setting up the company and all. So we have known that it's a good one now. So what do? We want to understand or learn areas where we can strengthen how we can further strengthen the internal controls. How we can further strengthen the internal controls. The first one here is ensure that duties are segregated. It cannot be the person receiving money, person recording it, person recording it. There is high tendency that the person receiving the same funds, at least the person will have to go and doctor some figures at the end of the day. So we have identified that risk. It's a risk already. So it's a risk already. So for us to mitigate this risk, we want to strengthen the internal control measures or policies that ensure duties are segregated. Segregated. One person should be the one to perform this. There is no one person should start and finish a process. This is to strengthen the internal control to ensure check and balances. Check and balances. Ensure that duties are at all times segregated. So this is a strong point in ensuring internal control and strengthening the internal control.
If they send you data and you check your account number, you will see. I mean, I use the code to check that.
You will check your balance, sir.
Mute your mic.
I check my balance.
Develop adequate physical control of assets. Develop adequate physical control of assets. Now, these assets, I already mentioned it before, that these assets could be current assets. If it's current assets, we are dealing with receivables, cash at hand, cash at bank. We are also dealing with receivables, cash at bank, accruals. All these form part of current assets. Now, how do we deal with receivables? Ensure that these receivables are monitored to prevent loss of funds, because these receivables are people who are owning the organization, and if the funds are not forthcoming, remember we already provided for it in our revenue, because it's a policy that it will only be recognized when aimed and not necessarily when it has come in. So for that reason, we have already provided for it in the revenue, and we have already provided for it in the receivables. And if it does not come now, what happens? Statements is over revenue has been overstated by that amount, which will not show a true and fair view of the financial affairs at the particular point in time. Then the physical asset, looking at the physical asset now, protect the asset, the cash in the organization, where should it be displayed? Or, for instance, in a law or if the policy says that all money should be banked each day, then when it is before, every accounting record should be prepared and the money goes to the bank that day. And there should be a procedure or a policy that will also state what should be done when more funds come at the tail end of the business and you cannot bank it that day. It should be where the money is being kept intact, and the next day there should be a review of that figure before you taken to the bank to ensure that the money figure was used or was taken home. These monies were kept in the bank, in the organization, and they should state clearly what who should how these physical assets should be controlled, like the car organization, who is entitled, where is the car supposed to go, how is the fueling of the car being done, all the assets, the equipment of the organization, and all other assets that are the generator, how is the maintenance, what is it? We develop adequate physical control of these assets. Then you correct errors promptly. As far as you're a human being, errors will keep on coming, but The ability of the internal control process to be able to provide a proper procedure for us to rectify errors. If there is a reconciliation every day, you know that errors will be detected before it gets to 2 weeks, 3 days, that it become a long outstanding. It's better that the internal controls, how to strengthen it is that they is to correct errors as quick as possible. Then identify risks. Identify risks. What is inherent to your organization? Are you in the manufacturing? Are you in the consumer? Are you in the banking? Are you in the consulting? Are you in the agriculture sector? Are you in the other businesses, financial institutions? Where do you where does the organization or your company falls under? Identify the risk that is inherent there, and then try to draw out policies. Having the risk alone will the risk that this the risk that your money will lose due to any form of type of loss at all is you have already identified this risk, and you have analyzed how possible can you mitigate this. So you identify this risk alone has strengthened the internal control. When you're able to identify it, of course, you'll be able to also provide you the opportunity to think very well and bring up with the control measures in when you are identifying these risks. Develop these routine policies and procedures. And of course, these policies and procedures are not cast on stones. They can be evaluated often. Let the organization bring out policies to explain exactly the procedures on recruitment of staff, on what the staff should do and not do. For instance, now you cannot be doing the same business that your company is doing. That will bring conflict of interest, and therefore it's a policy and it's against the organization. And therefore, but who reviews this? But if there are policies, but there's nobody to monitor or nobody to 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 ensure adequate compliance or adherence, then nobody, then it will just be like that. But it's human beings that we help in the achievement of these control measures that have been set. As good as the control measures are, if a human that's supposed to carry out this function does not do, it will still amount to nothing. So develop this routine policy. Then the policy be there, and let everybody be aware of the policies that are there for the organization. So that when you fail in any of the policy, you know that yes, it is written, but you're the one that has not been able to adhere to this particular procedure or policies. And remember, these policies are also to help the organization to flow very well. That this should move to this, that when somebody apply for this loan, it should flow to here, to go here, due diligence should be done. It will also, and let me use the loan as an example now. If I give someone a loan, first of all, you need to understand what the person wants the to do, what is the person's proposed, let's say, what the person's cash flow. Can the person pay back this loan and all? So due diligence is carried on. But had it been there is no control policies in that regard, once you come for loan, you're my friend now. I beg, I will give you loan and all. But so far as the procedure or the measures are there, showing and stating clearly what procedure, what to do and what not to do at a particular time, that alone has strengthened the internal controls and to reduce the effects of if not being available. Perform reconciliation regularly. Reconciliation regularly. If you are there as the accountant, reconcile your books, reconcile your book up to date. Don't allow them to keep long. There should be policy that all reconciliation should be done before the day ends or before the close of business. Then for the monthly report or monthly reconciliation should be done at all. Remember, this is a general measure that you need to know whether you are working for somebody or you are working for your own business. It is still the same thing. You will still learn this learn this and able to assist to add value in your organization so that your organization will also meet up with with the purpose for which it has been set or it has been established. Provide adequate training for staff. Let the staff understand internal controls. This can be done through their induction period when they are just coming to organization. They should understand what are the penalties that should the penalties that are bound to those who do not adhere to this policies and all. So those staff, whether new staff or those that are there, constant training on them on the need for them to ensure that they abide by the organizational internal control measures. As I always say, these internal control measures are there to prevent occurrence that will damage or reduce or will make them not to achieve their goals. They have identified these areas and then they are working on ways every day. They are thinking of what they will do, reviewing what has done in the last week, the last month, the last year, coming up with policies, measures, threats that are coming in, both internal and external to the organization. And that with all this, if the staff is aware of this training, then and he knows the policies and all, and then there's someone to enforce or to ensure compliance, then the organization will be at the good points of meeting up this obligation as when due. Evaluate the internal controls. Let's evaluate the internal control we have so far. Is it adequate? Is it sufficient? How has it been done? Okay, in another way, let's do a test of controls. We say we should do this. What's the level of compliance? Do the percentage. This department has complied 20%, 10%. Should that be the percentage that is appropriate? No. Evaluate the internal controls that are already in place. Remember, you are working always to also ensure that this internal control that they are adequate. You can advise your chief financial officer if you're not the one. You can advise your superior. You can make a declaration. You can write a report on the needs you have identified or you have looked into the internal control that sets before now, and you have discovered a loophole in this area. Test these controls. This department is supposed to do this. You're supposed to do this. You have not done. You are supposed to do this. You have not done. This is supposed to comply. Let's see. Over the years, held us for not paying our tax early. Let's look at this because the control says that let us prepare our documents and finish before when the year ends. Invite our auditors. They should come and do their work. Then submit the report to FIS before 30th of June. Paid necessary tax if there is. Do this. Register your firm with this. Pay the annual dues. Pay your staff. When you deduct your staff pay as in, are they being remitted to inland revenue? Look at this and make the environment, evaluate the internal control that you have so far, and look out for room of improvement. Then let's look at compliance. Compliance means conforming to a rule, such as specification, policy, standard, or law. Compliance, as you noted here, is among the is the second level of defense, because at this level we are trying to ensure that the internal control measures have been set. Remember, we have internal control measures and we have external. Compliance. If it's a bank now, during the account opening procedures, the account opening process, did the customer fill the form? Did the customer provide reference if it's a current account or a corporate account? Is document from CAC available? Is this and this there? This. Remember, remember that this compliance comes with a cost. That is, no complaint comes with a cost. Just as the internal loss, just as internal control not adhering to it also comes with a loss or a cost. So as this compliance. So this compliance as a second level of defense in organization is expected that we try the ones that are pertaining our own department, that is finance, or where you are in accounts, department of finance, or you are in the audit side. We will ensure that the organization complies with all the internal and the external procedures, external laws, external provisions. So compliance alone, compliance is also a very important aspect that we in the finance department, as students or as those who are working, we also need to understand, because when you comply with organizations, it will make it such a way that there shall be no cost that will be incurred as a result of for those who do not comply and on. So strict compliance to set rules, policies, standards, regulations that have been set internally or externally. This shall be, and it is after this that the internal audit, we want to ascertain whether compliance has been adhered to or not, and look at the lapses, and those who are supposed to be queried will receive their query, and those who are supposed to be cautioned or warned as the case may be. Now let's look at giving importance to compliance can help you. Okay, let's look at let's say the importance of the compliance. Giving importance to compliance can help you. I have mentioned I'll be able to get 5 that I would like us to discuss in this lecture this evening. One, which is giving importance to compliance, that is adherence to compliance and help you become a trustworthy business. You see, a lot of people have confidence in organization because you will not be fined. They believe that for you to adhere, that means your corporate governance structures or management structures are very robust, effective, and are able to do what they're supposed to do at all points in time. So it's make this possible that it become trustworthy business. And of course, if the business is trustworthy, that is how you will get more investors to come in, because of they understand that the business is doing well. It is adhering to both internal and external. At least the future is guaranteed as so far as this internal control and compliance is concerned. Then giving number two is avoid heavy fines. As earlier mentioned, that non-compliance to set rules, policies, procedures, laws will come with heavy fines. Imagine that internal revenue law says that you should submit your annual returns on or before 31st of January 20 of the following year. That is failure of which you are paying 500,000. If you imagine that 500,000 from your organization going out to pay fine rather than going out to bring more investment to the organization and all. So it avoids you are saving the organization from possible loss of funds through fines and all. If that money is converted to another aspect or business or for savings, you know what that can do to your organization. I just mentioned one example of the internal revenue submission of annual returns. I've not mentioned about the FRS where you will have to pay penalties for the first month of not filing your financial statement is 25,000, subsequently 5,000 naira and all. Then if it's for VAT, you will know that it's 50,000 naira per month of default. I know what that will become when you reach to even 1 month alone. You see, 50,000 naira is something that can be used to buy now that the fuel price is high for the organization. That can be used to purchase fuel for the running of an organization, or this was the case may be, or for other pressing needs of organization, rather than paying to paying. And then for the drivers of the company, when they're driving out their car, the company car, they should ensure that they have the right documents, or they don't drive carelessly, they don't drive against traffic. Because if they are held, they will be required to pay specific fines, they will pay all. So to avoid heavy fine, and that's the reason why this lecture, the staff are meant to be trained from time to time for them to be able to understand or know all this, because some of them may not be knowledgeable, but when they are trained and they are informed at all point in time, they will be able to avoid such things that will bring heavy fines to the organization. And then number three, of course, increase business revenue. Increase business revenue. You know, when there is trust in the organization, of course, there will be more investors, and more investors will convert to more business revenue, because the more money that is coming in, that are making use of it, converting it to more money and all. And of course, business will not be losing money like that due to theft, not only fine, through theft of the staff. If they are, although we mentioned earlier on that there is no 100% internal control that will make it that staff will not prefer, but there should be now. But let us do our best, or let the system make it impossible for any infraction. Of course, there will still be, but we're not giving absolute assurance. We are giving only what reasonable assurance. That word reasonable, not absolute. At least at that level, that should suffice. Then looking at the stakeholders' confidence. What is stakeholders? We have the creditors, we have the government, We have the employees. Employees will now understand that the business at least is going well and will continue to grow on their, at least their job is secure and all. So both the internal and the external stakeholders, it further gives them confidence that the company is doing well. Because if they're not doing well, the relevant authorities will publish their names as companies that have failed to do, or they come and sue your organization. And that's the embarrassment. You see your office when your customers come in the next day to come and do business with you. Oh, no way to go. And for that day, you have lost your business because you have failed to comply, and the authorities have held you, and you must go and then start. That is when you now start going to go and negotiate something that had it been you did the right thing, you don't need to go and negotiate with anybody on all. So let's understand that also. Then maintain clear standards on what you can and can do, what you can and can't do, and how your business should operate. That is, the business should only do that which has been approved by the relevant authorities. It's not involved in businesses that are not that have not been approved by you, because if there's any issue arising, the regulators will not know you because they do not give permission or the certification or the approval to do the business you are doing. Whereas what they gave you was only uh, that is what we're giving is not does not cover the approval does not cover the other business in which you have involved yourself in at this moment. And therefore we need to understand that maintaining clear standards on what you can and can't do and how your business should operate. How do the business want to operate? This one, the management will set out the rule of procedure, as I earlier said, rule of procedure, policies, rule out expectations from various units or departments of the organization. And then remember, this internal controls varies between organizations. Some have a big structure, some have a single structure, some only operate in one location, while some have branches all around the country and all. So what is there is available in company A will not be for company B, because the company is not a large one, it's a single one. And then those of us that are working in private organization, that the the CEO just decide to do things that he wants to do because he's the owner. Nobody is there, even the board members of the family, the father, the husband, the wife, the children, and the board of directors. And whatever they choose to do, they just sack anybody, employ anybody when they want, do things differently, and just sit down. There's no policy, there's no measures, things are going on wrong. They cannot know because so far as they're making their profit, where even that profit, they don't understand whether it's profit or not. But for them, since they are seeing money in their accounts, it's okay for them. They don't know whether it's profit or loss or whatever and all. So advise them, those who are working in such organization, by with this, we're able to advise them. You have added value. Even if it does not key into it, at least you have advised, and let it be on record that you have advised him or her on the need of internal control and the need of compliance in a relation, telling and explaining details. Make a prediction to them, because I'm seeing it because I've worked in a company whereby the man is there, even the accountant is not recognized an accountant, but it's paid the salary of an accountant. Everything the CEO is doing with the cashier or is doing with storekeeper, because the person has been there for long and they're of the same tribe and all. So the accountant doesn't even have power, even though he's paid the salary of an accountant. but it's not having power there. It's just there even to get record. You can't get record because there's no structure, nothing. The CEO can just do anything you want to do, just release, just go and sign paper, release 10,000 naira, release this, do this. I know it's a company, per se, but they should also learn to do the right thing as a company. And when you advise them, at least they will try to listen to you and try to adhere. And that is why you are there to add value to the organization. At the end of the day, you at least they will see you that you have added value to the organization. You have enabled them to prevent pilfering, because in that company, people were stealing things in the store, doing this because there's no control now. Who is recording things? Nothing. Things will just bring stock. They'll put it in uh, they'll put it in the store, no record. When it goes out, no record. So how will you know that stock or inventory item have moved, have come in today? Where has it gone? Where has it come? And all. And then, although the company is still making money, but even there are no financial reports. But how do you even know that there's profit or not? But because he just sees money in the account and believe that sure there's money, so just spending. There are no control measures. And then how will your asset be protected? How will the vision and the mission for which that company was uh, was set up is being actualized? So let's understand this and give importance to compliance. Remember, this compliance is not only uh, benefiting to the organization, it's benefiting to you as a person also. It makes you have integrity. Imagine that you did everything rightly. Even if things go wrong, you know that you are exonerated. Everything went to the right procedure. You have signed, and before you sign, before you append your signature on a document, please read it very clearly. Even if your sister bringing it to you, or your auntie, your father, your mom working in the same place with you, read it very well before you go and sign anything. It's part of the control method. That is why it flows from the initiator, goes to this, to the final approval. If you approve something that shouldn't be approved, and the next person in line also approves it, the error starts from behind, coming. So when everything goes down, you are also involved in it, because you're like a carrier of the problem will happen. So always try to detect, as an accountant or as a finance person, you need to have you need to have that, pay attention to details. So if you are now like internal auditor in an organization, you will pay attention to details and also try to ensure that you assist the organization to assist the organization to ensure that staff at all levels comply with the internal control and are complying with the policies, regulations internally and externally. So having learned that, let's look at steps to ensure compliance. Steps to ensure compliance. Steps to ensure compliance. Keep track of changing laws and regulations. Let me also mention here that your role, we, your role as an accountant or finance is not just in that way, but you are also as an advisor to the organization. So if new laws come in, you need to track it, listen to news, read papers, look at the new trend, be abreast with what is happening, like the new laws. Some people don't even know that they have increased the the tax on some taxes, although it is done it's now done on tax pro max. So once is whatever you asked to pay is what you will pay. So you know you will not still, but I'm referring to when there is no such platform, you don't know what have changed. And then some states don't have that robust uh, um, system to track all these things. So you still need to prepare them and be abreast of the changing laws, the rates, what have the finance law introduced, what has it reduced, so that of course you can also argue with the revenue houses or yeah, the FRS guys when it comes to just bring unnecessary unnecessary fees for you to pay just because they want some cut in it or so. But you need to also understand all these things and know if they don't know, and if there are internal control policies, this will detect all this. You know and surely prepare the reports that when you and then the laws and regulations. What are the regulations in this organization you are working or you are being associated with? You are now called to come up, and then you need to ensure that there's compliance. We keep track of changing laws. You check track of them because your ignorance will not be tenable anywhere. It's not an excuse. So you know say that, "Oh, I didn't know that this is the new percentage. I didn't know that we are meant to submit this statement on this date. Didn't know this, didn't know that." You will still be fine. So if we keep track of changing laws and regulations, then we will be able to to ensure that there's always the strict compliance at all times. Schedule regular internal audits. Internal audit being the third line of defense should be scheduled regularly so that you can review, review the revenue and give the revenue assurance of it that yes, every item that is in the revenue column is accurate so that revenue will not be understated, neither, neither will it be overstated. So internal audit. Remember, when we are looking at internal controls, we are still talking of it that are being designed that to meet to also ensure that the business financial statements are prepared and they show a very true and fair view of the affairs as at the date of reporting. So you have to track and ensure that everything that is in the that is in revenue is accurate, in cost of sales or direct cost is accurate. The salaries, you check the salaries for the year or for the month, ensure that the salaries are not paid to good staff or they are paid in the right amount is paid to each and everyone who is supposed to benefit. Look at it, learn some skills that will help you to do this analysis. Get the Excel form of it, calculate, check. Just give yourself a reasonable assurance that these statements are prepared appropriately. Because these statements they are going out far. They are going depending on the this anyway, if it's a limited liability company, if it is a public limited a public company and or PLC, public limited company, on all of that. So regular audits. These regular audits we also add value to the organization. At least we have uncovered one or two. We have uncovered one or two now. Let me give an instance now. There was no a strong internal control in one hospital when I was an audit senior. I was working in an audit firm. We discovered some glitch or some system lapse on the reporting of cash. Because there was no policy in the organization, so nobody knows what is doing or not. There's nobody to control it now. Now, this is what happens every day. The money that comes in, the person will prepare the reports at the cashier. We give it to the account officer. We prepare the report. So the account officer will now prepare the report, and then this is what we have at hand. Then they'll submit the report to the MD to also sign. But remember, there's nobody to be checking that the cash on paper is the same as the cash physically. And there are discrepancies, a lot of discrepancies. Those monies were collected, signed, but maybe then the accounting staff there will use the money to maybe for their private use, but the real figure will be on paper, hoping that they will pay like it's like a soft loan for themselves to pay back later, because nobody is there to monitor whether the cash in paper is exact with the cash that is physical. What's the control gap there? That using them instead of paying the money to the bank account for that day or the next day, they will now make use of the money. They maybe pay back in 3 months because the person signing the MD does not go and count the money himself, which means you have a weak internal control system. There's nobody to monitor them to ensure that what is reported on paper is exactly what is at cash. So that is why the issue of cash count is very important. You cash count to ensure that exactly what, if there's any difference, they should seek for, they should explain why there is difference between the physical cash and what is on paper or what is on system. And then on the other assets also, for instance, there are some assets that are appearing on the register, but they're not physical in the bank. They are not physical in the organization. You ask, the internal control now seeks to investigate. They investigate where is the asset? Has the asset been sold out? But is it still appearing on the asset register? If that is still that means the assets carried in the financial statement is actually showing the wrong figures, then you investigate and look at that also. It could be that the asset has been preferred or have been taken home by a staff for their private use and all. There should be scheduled regular internal audits. And then there should be surprise visit or surprise supervision. You just try to give a surprise visit to your subordinate and to see that they are actually doing well or they're actually carrying out their activities properly. Now the third one, to take to ensure compliance. Number 3 is enforce employees to be compliant. First of all, before you enforce them, you let them know the reason as to why they need to comply, the reason as to why they need to comply. And when that is done, they will be able to remember. Oh, I always say this, that don't just explain, don't just roll out nice for auditors, for internal auditors, procedures. Let them understand the reasons for that. Let them understand why this policy has been rolled out and why they need to strictly adhere to it. Because now a lot of things are happening in companies, a lot of things are happening in the country, whereby employees are busy eating from the wealth of the nation illegally because of this general situation I faced in Nigeria now that saying the economy is bad, things are difficult and all. So they are helping themselves with this money. But if they are adequate and sufficient internal control measures, these measures are more. Some people will just go and download, will just go and when they ask to develop internal control measures, you just go and download policies and then come and give for your organization. Are you first of all, you need to understand how your company works, the size of it, the size, the structure. Then you can now understand what and what or how you can download it online, but you should work on it. Don't just download it and then just bring it for use. Maybe what we're downloading is for a different country where the business environment is different from the environment you are finding yourself here in Nigeria. So we need to set up these procedures that we not just the policies alone, but let's be the ones that can be able to add value to your organization. Review the system every day. Review it. There are a lot of risks that are in the organization now. But how can we mitigate these risks now? Okay. So what I'm saying, are you there with me? I'm also, can you hear with me? So look at what I'm trying to explain now. You try to enforce employees to be compliant. Enforce enforce employees to be compliant. Train these employees so that they will understand what and what is available at any point in time. So as we have discussed this evening, we can now understand the difference between this internal control, internal audit, and then compliance and all. So these internal controls are the procedural processes that are put in place by companies to prevent fraud. This is important to prevent fraud. We want to prevent fraud because we all know what is fraud. We all know what is fraud, this issue of fraud, how this issue of fraud is affecting different organizations now. The report that we just got, I think, a month ago, we discovered that just for the first quarter of the year, the first half of the year and the first quarter of the year, and is it how many? I've forgotten the figure, but up to some billions were lost by a bank just for fraud. In as much as there are internal control systems, but then they are also finding their ways. So we also need to be technology inclined so that we're able to identify these measures in which this possible, that is what I'm trying to look at, the risks involved there. Look at the risks, you assess the risks that involve, you assess the risks, and then know how you'll be able to mitigate this risks and prevent it and look at it to promote accountability and ensure the integrity of financial data. Ensure that all the financial information are being presented are appropriate, they are correct. So another thing I did not mention while talking about the strengthening of internal controls, I didn't mention the issue of maintain adequate supporting documentation. Adequate supporting documentation ensure that every expenditure that has been made has a supporting document, and those documents should be made in such a way that are supporting what the expense was used to done. This will enable audit train and be able to understand that to understand whether this expense is wholly, whether it's reasonable, whether it's exclusive, whether it is necessary, incurred for the business activity. And also for me to also mention that the review and approval process should also be made known. What the review, the approval process, and the transaction. Then perform self-evaluation of internal control. When you evaluate the internal control that is already been set, from there you'll be able to look at where you are lagging behind and then be able to work more and strengthen it. So as we have tried to discuss this topic, this is the last slide that we have. So what you're looking at for now is for feedback, for questions, for anyone that has one or two things to contribute or to add. I always do that. For now, I'm done with my presentation, and thank you all for listening. I'll wait your question. Thank you.
Hello. Good evening, everyone.
Good evening.
Yeah, I want to appreciate the facilitator for this wonderful value that he has released on us, and also to appreciate every participant that took their time to attend this training on compliance. I believe that value has been released and the value has been gotten in this session. And we are having our next meeting this weekend, and we hope to see you all again. And the facilitator, someone asked about the material. So sir, please, I just want to know if you will be able to give us the material to distribute to those that ask for it.
Okay, of course, I'll do that.
Okay. All right, thank you very much, sir. Once again, we appreciate you for this wonderful session that you have. We appreciate you for this wonderful session that you have rendered to us. Thank you very much. And to all the participants, the material will be dropped in our general group chat where you can get it. Thank you very much. See you guys in our next training.
Thank you very much for the value addition. Thank you very much.
Yeah, bye-bye, everybody.
Thank you very much. God bless. Bye-bye. Thank you very much.